Hey there, Brad Castro from GreatOptionTradingStrategies.com. Today I'm continuing with a weekly trade recap series on official trades from inside the Leveraged Investing Club. Think of these as quick little cash secured put and covered call for income case studies. You guys seem to like these and I love putting them together because I learned a long time ago that just about every trade has something to teach us or reinforce in us. And the great thing about them is that they're timeless, because the lessons they offer are based on principles that you can apply to your own trades, even if you're watching this 10 years in the future. So we're really finishing the year strong inside the Leveraged Investing Club. A couple weeks back, we closed 4 winning trades in 1 week, which I think was a record for us. And this last week, we were able to exit and book gains on 3 more trades as it was a monthly expiration. Specifically, we exited a PayPal December 19th, 2025 57.50 short put position that generated 13.32% annualized returns on real cash secured capital over 18 days. A Palantir December 19th, 2025 $165 short put position that generated 15.29% annualized returns over 45 days. And a Bloom Energy December 26th, 2025 $75 short put position that generated an absolutely insane 642.79% annualized return over 1 day. So which one should we drill down on today? The nice, boring, so well behaved that it was easy to forget it was their trade on PayPal? Or the 45-day trade on Palantir where we did dance a bit with Mr. Market and had to do some rolls and adjustments, but at the end of the day, the trade was pretty easy to manage and repair? Or that crazy 1-day trade on Bloom Energy? Now, I actually do want to cover the Palantir trade at some point because one of our rolls and adjustments was a bit unconventional and comes with both pros and cons, so it's definitely worth looking at that. But the Bloom Energy trade was super fun and does have a couple of key insights embedded in there, so of course we're going to cover that one today. And those insights or lessons are what makes a good trade entry, and once you know what kind of setup you're looking for, be patient, and wait for that setup to actually emerge. And there might be 1 or 2 other insights along the way. So let's jump in. Now, as a reminder, as I said a few videos ago, every video I post from now on will be about showing you exactly how to sell options like we do inside the Leveraged Investing Club, either naked or cash secured puts or covered calls for income, and encouraging you to adopt our club mindset where we see ourselves as the insurance company from hell. Our attitude is that we sell lots of premium and then we avoid like the plague ever paying out a claim, meaning we make money from Mr. Market. He doesn't make money from us. So if a trade goes against us, we repair it rather than surrender to it, and almost always walk away with more money than we started with. And most of the time, the returns on our repair trades, our bad trades, still end up producing double-digit annualized ROIs on real cash secured capital. So each video I post will touch on 1 or more of these 7 pillars or categories of the option selling insurance company from hell model. Today we'll be looking at trade setups and also option selling trade management. Also, regarding these weekly trade recap case studies, I put together a dedicated playlist for them, which I've linked to in the description section. And while you're down there, check out all the other valuable option trading resources I have for you. It's a lot. So the Bloom Energy trade was an example of a new class of trades that I recently added to the Leveraged Investing Club that I call Quick Hit Weeklies. These are separate from our core sleep at night strategy trades and focus more on options with higher IV or implied volatility levels. While these may seem more aggressive and speculative, we keep the duration short, our entries disciplined, and our opening position sizes small. But even if they do misbehave, those high implied volatility levels make managing and repairing them pretty straightforward and easy. Like I said, we just started officially trading these inside the club, but so far we're 3 for 3, including that Palantir trade we also closed this last week. That one did misbehave some, and there were some rolls and adjustments, which is why it ran 45 days. But again, heads we win, tails Mr. Market loses. The trade required some management and repair intervention, but still got us 15.29% annualized over 45 days. I'll take that any day. And a quick side note, that successful Palantir trade was our 45th winning club trade, profitably exited in 2025 against 0 booked losses. So let's look at Bloom Energy and try to determine why it was so successful. Now, I'll be honest, the stock wasn't even on my radar this week until a club member posted it Monday and suggested an $80 short put position. Now, I could see his rationale for the $80 strike price, including that it was decently out of the money and was offering a fair amount of downside protection, and the premium levels were insane. Now with our quick hit weeklies, it's less about fundamentals or valuation and primarily about the technicals and how much premium is available. And the key is to be really disciplined on timing the trade entry because by definition, these stocks are going to have the potential to be a lot more volatile. So you don't have the luxury of being too nonchalant when entering one of these. Just because they should be fairly easy to repair if something goes wrong because there's so much premium in the options, that doesn't mean you shouldn't do everything in your power to avoid a repair situation in the first place. It's like that Palantir trade. Very respectable 15.29% annualized returns over a 45-day period. But it was originally supposed to be a 54.60% annualized return over 3 days. In other words, it may be heads you win, tails Mr. Market loses, but you want to be flipping heads as often as possible. Okay, so this is an intraday chart I put together inside the Leveraged Investing Club on Tuesday. In that club post, I mentioned that I had previously just eyeballed things and was looking at the $80 level as support. But after zooming in a bit, I felt that the $85 level was the actual current battleground area, or right where the stock was trading at that point. I said that I wasn't ready to pull the trigger yet, and that I wanted to see if 85 held. If it did, then I'd be looking to enter the trade as a quick hit weekly. But if 85 didn't hold, then I'd be watching the $75 level next and starting the process all over again. After the market closed that day, Tuesday, I posted this updated chart with the same support and resistance lines. So that 85 level did hold, sort of. And inside the club, despite the stock having recovered from its intraday lows, I posted that I thought things were still inconclusive. Now, this next chart is really cool. So this is where the stock was trading late in the next day's session on Wednesday. 85 did not hold, and then the stock dropped like a ton of bricks right down to that $75 support level. Now, there are a lot of technical analysis skeptics out there, and I always strive to point out that technical analysis is not a crystal ball that tells you what will or won't happen. It simply tells you what's more likely to happen in the near term and what's less likely to happen. But if a stock is trading at an identifiable support level, one of two things will happen. Support will hold or it won't. Had there been a bounce instead of a sell-off, I would have been happy to sell puts at the $85 strike. But there wasn't a bounce. There was a breakdown. And this is exactly why I waited to enter the trade. I saw 85 as a likely support level, and support is a great place to sell puts, but only if that support level holds, which you don't really know for sure until there's some kind of test followed by a move higher in the shares. If you sell puts at support simply assuming that support will hold and you're wrong, then you've just entered a trade that now needs to be repaired. And once the stock broke down below 85, there was nothing technically to keep the stock from trading all the way down to the next identifiable support level, which is exactly what happened. So by being patient, worst case, we avoided a bad trade. Or best case, we avoided a suboptimal trade with lower returns and a longer holding period. Instead, even better, we set ourselves up for a successful trade at a substantially lower strike price. Remember, we were originally looking at the $85 strike, but we were able to sell at the $75 strike. But again, only if that $75 support level proved that it could hold, which as you can see in this chart, it did the next day on Thursday. In fact, that was more than a bounce. It was an opening gap higher, and it was at this point that I was more confident that the stock sell-off was more or less done in the near term. So the stock trading at $84.76 a share, I sold that $75 short put position expiring the following Friday, or 8 days away, for $1.90 per contract, which is a lot. If held until expiration after commissions and fees, that worked out to be a really high 115.30% annualized ROI over those 8 days. Now, there were some club members who got even better pricing than I did, as the stock bounced around quite a bit on Thursday. But the stock definitely had itself a nice green day. And you can then see what happened on Friday, the next day. Some pretty strong follow through. After the stock traded all the way down to that $75 support level on Wednesday, buyers started coming in, and they showed up again on Friday. Okay, that was the trade setup. Now let's briefly look at the trade management aspect, or why did we close a winning 8-day trade 7 days early? Well, it was actually a pretty easy decision to exit the trade after just 1 day and lock in our gains. For one thing, when I ran the numbers, I was able to lock in 69.68% of my max potential gains in just 1 day. I'll take those terms anytime. But there was also a technical reason. I didn't draw it in, and it may be hard to see, but I could see the case for $90 being a sort of mini support and resistance level. So coupled with how much of our max gains we could lock in, it was a no-brainer to exit when we did. I closed my position when the stock was trading at $89.26 a share, which was a little above where the stock closed for the day and the week. So as with that $85 level earlier in the week, I see the current $90 area as still unresolved. Bottom line, the short put position I entered the day before for $1.90, I was able to buy back the next day for just 57 cents a contract. The original projected annualized ROI in this thing was already crazy at 115.30% over 8 days. But locking in 70% of the max gains in just one day turned the annualized ROI into an absolutely ridiculous 642.79%. Yes, abbreviated holding periods definitely skew the annualized rate, but there's no question this was a crazy good trade. Even better, because of how much the stock was bouncing around on Thursday and Friday, there were club members who ended up with even more ridiculous returns than what I got. I basically banked $1.33 a contract, less minimal commissions and fees, on a $7,500 per contract cash secured capital requirement on a one-day trade. But there were club members who banked a lot more than that on their trades. One veteran club member posted that he sold 10 contracts and walked away with $1,931.22 in profits. So he probably netted $1.94 in booked income per contract. Now, he doesn't exactly have a small account, but still, he was basically able to recoup the one-time cost to join the Leveraged Investing Club as a lifetime member in a single day with one trade. Of course, he's been a member for 5 years, so he obviously recouped his membership a long time ago and many times over. Okay, to summarize, I love this trade, not just because of the fantastic one-day returns, but because with this one, it's very clear to see what a high-quality and disciplined trade entry looks like, and also the two factors we use to know when to exit a winning trade early, which is the annualized metric and being on the lookout for potential technical warning signs. With the trade entry, we waited until we got confirmation that a support level was actually holding, and we didn't care which one it was. We were patient. We knew that at some point the stock would find support and bounce at a level that made sense on the chart, and so we just waited until that happened. We didn't fall in love with the $85 share price level, and we didn't fall in love with the $75 share price level either. If 75 had failed, we simply would have gone back to the chart and looked for the next likely support level. This is not a fluke, by the way. These are the kind of setups we're always looking for. And if you want to see more examples, I've got some other videos linked in the description section that show how effective selling puts or covered calls for income at proven or confirmed support levels can be. Perfect put selling trade entries, or how to catch a falling knife, selling puts and covered calls at support, and timing your put selling trade entries with basic technicals. And regarding the exit, those two factors of the annualized metric and keeping an eye on the technicals is exactly how we manage all of our winning trades. You can check out the video when to exit a winning put selling trade that's also linked in the description section below. Okay, if you enjoyed this and want more insurance company from hell resources, be sure to check out the channel's other videos and subscribe if you haven't already done so. I've got a backlog of video ideas for you, and I'm trying to post 2 new videos a week. I'm also organizing these into various playlist categories, so that should make it easier for you to find the resources that are the most valuable to you. Also, sign up for the Daily Tips newsletter via the pinned comment below. The newsletter is a tremendous option selling insurance company from hell resource and really complements the YouTube channel, as some topics are better suited in article format and some are better suited in video format. Both resources are all about heads you win, tails Mr. Market loses. So if you're serious about finding great new trade ideas every week and consistently turning even losing trades into winning trades, the newsletter is a resource you're going to want. You can sign up directly, or there's also a link in the description section below to the Great Option Trading Strategies downloadable library page. There's a lot there. Download anything from there and you'll also begin receiving the Daily Tips newsletter automatically. Heads we win, tails Mr. Market loses. That means you should be coming out ahead on virtually all of your trades. Okay, until next time.